Thanks, Aisha. Good evening, everyone. On behalf of IDFC Securities, I would like to invite you all for Q1FY21 earnings call of United Breweries Limited. From the management side, we have Mr. Berend Oding, CFO of United Breweries, and Mr. Punacha from the Investor Relations team. I'll hand over the call to Mr. Berend for his opening remarks, and then we can take up the Q&A session. Over to you, sir.
Thank you, Mayur. Good evening, everybody on the call. Thank you for joining today. I hope everybody's safe, doing well. And today we'll discuss the Q1 results, and I will start with providing commentary along with a few slides, and after that we'll open it up for questions. So on the key results highlights, it is clear that Q1 has been an unprecedented quarter, severely impacted by the pandemic and related lockdown and restrictions. Net sales for the quarter were down 75%, and the company posted an EBITDA loss of 94 crores, against the context that Q1 is normally the peak season for the beer industry. Interest expenses were down 7% for the prior year. If we turn to slide 4, just to recall that there was a full lockdown in place till May 4th. Opening up and restrictions in place different state by state, but common is that on-trade outlets were closed for the full quarter and continue to be closed today. UBL volume for Q1 was down 77%, moving from 100% down in April to 57% down in June during the quarter. On the production side, the breweries have put in place all COVID-related measures to ensure all guidelines are strictly adhered to. We continue to observe local restrictions and temporary lockdowns occur from time to time. On the taxation side, some state governments imposed COVID-related taxes, which have negatively impacted the industry. Subsequent tax reductions have happened in Delhi and Orissa. The volume performance by region is depicted on slide 5. North volume down 71%, with higher decline in Delhi due to the severe initial COVID tax, which was subsequently reduced in early June, while states of UP and Haryana performed relatively better. In West, posted a 79% decline, with broadly similar decline in all the main markets. In East, there was a 90% volume decline due to the imposition of high COVID tax in West Bengal and Orissa. Orissa taxation was reduced early July, while today no over-counter sales in Orissa are happening. In South, there was a 77% volume decline. Karnataka and Telangana volume trend was ahead of the company average, while no sales in Andhra Pradesh due to the low demand and state policy measures. There was a stronger decline in Kerala due to the extended lockdown and introduction of mandatory online pre-ordering mechanism. The net sales breakdown is shown on slide 6, which, besides the negative volume, there was a positive price mix impact, with the main element being both positive price and state mix in more or less equal size. The EBITDA breakdown on the next page shows the main impacts being volume related and hence reducing the gross profit and gross margin. This was partly offset by reduction in personnel expenses by 6% and other expenses by 63%, but due to negative operating leverage, it resulted in an EBITDA loss of 94 crore. Turning to the slide on outlook and summary, the company has and will continue to manage all elements of cost and capital investments in light of the uncertain demand. Active cash management resulted in net debt up by 120 crore at the end of Q1 versus the prior quarter. The industry outlook is uncertain with negative macroeconomic growth outlook and continued direct and indirect impact from COVID-19 measures. Overall, UBL is well positioned to navigate the current circumstances with a leading market position, strong brand portfolio, and a very robust balance sheet. The company continues to be optimistic about the long-term growth drivers of the industry and is committed to strengthen its market position while leveraging newly emerging opportunities such as home delivery. With that, we'll be happy to take your questions, so please go ahead.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks. My first question is on the home delivery consumption. So there are companies like Hitbar where some of the liquor companies have investment, and now e-commerce companies are tying up with these kind of operators. So are you present on such service providers like Hitbar, and do you also have plans for investing into similar kind of operators?
Yes, I mean, the opening up of home delivery for also the beer industry, I think, is a very positive development. So we actively support the new business models. It's early days. I mean, we will not directly invest in the sense of partnership or ownerships or any of those kind of models, but definitely on the commercial side, we operate with a number of these companies to make sure, this is set up in a viable way. And I think the long-term opportunity is there. So that is something we support.
And so what is your initial reading on home delivery in Jharkhand? It has been reversed. In states where it's still continuing, how would be your performance versus some of the other industry players? I know it's a very volatile period, but in general, qualitative comments?
I think in general, you see across the states different participants, different models. I think over time this will definitely emerge and evolve. So the jury's out as what will be the best model, but I think there's a very active interest from various e-commerce players, but also many industry participants. So I think it has many things going forward to evolve into a long-term opportunity. So it's early days, but again, promising longer-term prospects.
So my second question is on the consumption in the pubs, bars, etc. So anything globally you're doing, which you are also doing in India, for example, liquor companies, both Pernod and Diageo in India, supporting the pubs whenever they open in terms of the very tough time they are facing. So in whatever way they can support, they are supporting. So are you also looking to do that, and any other best business practice from other parts of the world which you are planning to bring to India when this opens up?
Yes, obviously we're very actively in contact with other markets across the world. We see very different models emerging, and that's I would say a lot of creativity in terms of measures, social distancing, but also supporting pub owners, operators as to make sure there's a conducive environment that is totally safe, but also brings back people together. So those kind of ideas and best practices we definitely have onboarded, and we have prepared plans that as and when on-trade is allowed to operate again to support business owners there.
And sir, two follow-ups here. What is the pushback from governments here? Because now everything is almost open, malls are open, most other consumption are open now. So what is the timeline you are getting from the governments, different governments, and what is the pushback? And secondly, are you seeing some shift because now consumer is obviously at home, so more of family consumption may happen. So do you see that as a positive and that as a silver lining from medium long term, that change in the habits?
Yes, on your first question, I cannot really comment on the rationale for the unlock measures and what will be done at what stage. I mean, we come with proposals and we think we have viable plans as to how things could operate, but what will be in the next unlock measures, etc., I cannot really judge. Definitely there's a point on home consumption, so indeed I think that's the silver lining that more and more this gains traction. I mean, consumer behavior will not kind of change overnight, but it's again something we are definitely have supported in the past and will continue to do even more so, in the sense that this is a more and more of an opportunity that drinking at home with a beer, with family, with friends, I think gets socially more and more accepted, and on the back of COVID might see an additional growth phase.
Thank you. Abneesh, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Pawan Aluwalia from Laburnum Capital. Please go ahead.
Yes, thank you very much. Just wanted a little more color on the mild versus strong mix. Why is it that strong declined more? So that's one question. And my other question is just from a longer term standpoint, if you look at the evolution of the beer industry around the world, there has been the rise of craft beers and niche beers everywhere. Any thoughts on how you're tackling that in India, where obviously we have a very strong flagship brand and we have the ability to introduce products from the global portfolio? How do we plan to address the inevitable emergence of maybe regional brands or niche brands targeted at particular sort of sub-segments? Is the idea that we would try and develop some on our own? Would we look to acquire emerging brands? Any thoughts on that would be appreciated.
Yeah, I mean, there are two parts to your question. The first part is why mild has done better than strong in this tough time. As you see that a large section of this premium and super premium segment that we are currently having brands are in the mild, and most of this super premium segment has grown vis-a-vis drop in the other brands. And strong, which is largely your Kingfisher Strong, which is about 60% of our volume, has been hit on account of this closure, and the lack of opportunities for people to consume this kind of segment has dropped. And
okay. So another way of saying that is you think poorer people have been more hit, and therefore, this being kind of discretionary consumption for the poor has taken a very big hit.
You can't say poor. I mean, it's like the large majority of the Kingfisher Strong is consumed in locations which have been shut. For example, in many retail outlets, they used to allow consumption on the location, even though it is against excise rules. But even with the opening up of this retail outlets, consumption at that location is not being allowed now, considering social distancing norms. So this has affected the opportunity to consume. Not many people in this country can carry alcohol home. So these retail outlets also allow consumption there. Now, even with the opening up of outlets, this consumption is not being allowed.
Understood. Thank you.
Have I answered the first one? Regarding the second one, yes, we have this in our portfolio. As you know that we have launched wheat beer, which is in response to this new emerging craft beers, which is by and large wheat beers. And we will address this segment as and when it becomes relevant, which we are currently doing.
Thank you.
Thank you. The next question is from the line of Himanshu Shah from Dolat Capital. Please go ahead.
Thank you, sir. Thanks for the opportunity. Just a couple of questions, sir. Sir, first, can you provide some outlook on how July and August have been panning out? You had called out that June was 57% down year-on-year in terms of volume. So some color on how it's recovering July and August?
Yeah, I think things stand today, it's too uncertain to provide really outlooks or expectations. I think from our company side, we look at all kind of scenarios and trigger points as to how to make sure we're competitive and ready to serve the market as the industry demand will develop. But yeah, I think we will see that it will take time for demand to recover, and it's linked to the overall development of the pandemic, lifting of restrictions, and the overall consumer sentiment.
So you would like to qualify out quantitatively some number, like it would be 30-40% lower versus last year or pre-pandemic level or even
No, I mean, we share the numbers month by month for Q1. I think for Q2 we'll do that when the time and the place. I think overall, it is an uncertain market as we have stated in the release. We've seen restrictions come and go. I mean, in Karnataka there was a week-long lockdown in July in certain parts of the state. In other elements, we've seen a bit of good news that, for example, in Mumbai, over-the-counter sales are now possible. We've seen actually today in Chennai a lot of trade opening up. So yeah, it's I guess steps forward, steps back, and probably that is all related to how the pandemic will develop in the months to come.
So related to this, is it possible to provide some color on volume or value mix region-wise at least? You have provided year-on-year decline in each of the region, but what will be the contribution of each region, either in terms of volume or value, if you can provide some color? On an annualized basis also it will work.
Yeah, we don't provide further details. I mean, we shared, I think, the relevant inputs in terms of the regional volume performance and highlighted some states that were more positive or more negative. Besides the overall price mix we've seen on the top line. So I think taking that in totality should give you some insight as to what happened in Q1.
Right. Just one more question. The gross margin decline has been quite sharp both year-on-year and quarter-on-quarter. So is it due to the inflationary pressure on our key raw materials, that is glass bottle and barley, hops, etc., or is it more to do with taste mix or combination of both? Some color if you can provide on that.
Yes, actually it's more the latter. So this is really about state mix and the brewery mix as such. In terms of input costs, actually bottles and molds were more or less static in the quarter. So it's really about state mix and some component also of low utilization. So you get inefficiencies in the production, in energy, etc. So that's been impacting the gross margin for Q1.
Okay. So just two more questions quickly. One is, if you can, we have seen sharp decline in other expenses year-on-year, 63%. So is it purely due to the volume decline in business, or there are some cost rationalization initiatives also which will continue in future, or basically which will sustain in future even as volumes recover gradually?
It's both. So some parts are linked to volume, but also some parts are definitely around cost management. So a lot of the discretionary spend have been brought back. Commercial expenses, I mean, if there's a lockdown, obviously we're not continuing the same level of advertising, etc. So it's a mix of both.
Okay. So anything you would like to call out on cost management part, means like what could be potential savings that may accrue in future?
Yeah, I'm not gonna share an absolute number because I hope you appreciate the market and how it evolves is very dynamic. So that's how we also look at our costs and our advertising and our spends. I mean, I think with on-trades open up, we'll be then definitely supporting that with appropriate programs to get people back, get confidence back. But as to how and when that will happen, that's very uncertain. But definitely, again, we're looking at all scenarios, make sure we tailor our costs to how the demand picture is evolving.
Sure. So just last question, CapEx outlook, if you can provide for the year. Generally, we used to spend 250 to 300 crores. Last 2 years were on a higher side. So some color if you can provide on CapEx for FY21 and 22, both the years.
Yeah, the CapEx. Yeah, on the CapEx side, the last 2 years we were around 400 to a little bit above crore. That included quite some capacity expansion as well. Obviously, that all has been suspended. So for this year, I think we're closer to a figure of 200 crore. But within that, there's a fair share of projects that have been, initiated before COVID. So we'll be finalizing that circumstances would allow it. So it's brought back significantly.
Thank you. Himanshu, we would request you to please come back in the question queue for any follow-up questions, as we have several participants waiting for their turn. The next question is from the line of Aditya Suman from Goldman Sachs. Please go ahead.
Yeah, hi. Good afternoon. So firstly, in terms of non-alcoholic beer, any update? Have you seen sort of an improvement in mix, given that that segment has been sort of more open than the alcoholic beer?
For the non-alcoholic, yes, we posted a 30% revenue growth in the quarter, so that's encouraging, despite, of course, not a full lockdown, but overall challenges in the marketplace. Particularly some good trading on the e-commerce platforms, so that's picking up quite well, and we're pleased with that progress.
And in terms of, is this now being sold across the country, or is it in specific states then?
It's sold across the country.
And that's both brands, right? So the Radler and Heineken?
Yes, this includes Heineken 00 and SKUs under the Kingfisher Radler umbrella.
Excellent. And one more question on sort of production. To what extent is your production capacity normalized? I mean, in terms of, I understand that capacity utilization could be low just because demand is lower, but are all your factories running, and could you run them to full capacity if needed?
Yes, so we have resumed all operations. As you can imagine, from time to time, depending on local outbreaks, there could be curtailment or restrictions on production, but we don't have any unfulfilled demand. So, across the whole network, we're able to supply the market as the demand is there.
I understand. So when demand normalizes over the next few quarters, the supply side would not be an issue?
No, I don't foresee that. No.
Excellent. All right. Those are my two questions. Thanks.
Thanks.
Thank you. The next question is from the line of Jatin Chawla from First Voyager. Please go ahead.
Yeah, hi, good evening. Thanks for taking the question. One is, if you look at the quarter, the spirits companies have done a lot better. Just wanted to understand this beer to spirits shift that we've seen. Are there any kind of longer-term trends to read here, or this is just kind of, factors impacting things in the situation that we are in right now?
Yeah, I think beer has been a bit more impacted versus spirits. First of all, it's a more bulkier product, so if you want to take something home, I guess it's less convenient, I guess, than maybe a single bottle. Secondly, for beer, you ideally have it cooled, so having that kind of slot in your home fridge could be a challenge in some areas. So I think that's why the beer industry has been a bit more impacted. As to what is structural about it, how will it pan out, I think it's very early days, very little data as of yet to say that this is to what extent this will last, or will it change. I think that's sort of.
And prior to COVID, what was your on-trade share?
From our volume base, around 20% was on-trade.
I might add something here. Because even if you say on-trade, a lot of our retail shops also allowed consumption, which is now stopped. So the effect has been larger than it seems on paper.
So if you were to kind of take a guess on how much of that was around the retail shops, then the number would be 30-35% or even higher than that?
We can't, because which are retail shops which have bending rules, we can't really comment on that. But if you look at the market and the way it operates, many retail shops what volume we would like to call out, but many retail shops did allow consumption on premise.
So the reason I asked this was because the spirits companies say on-trade for them is 25%, and one would normally think that beer would have a higher on-trade than spirits. Because the kind of reason to harp a little bit more on this question.
Yeah.
Yeah, I think we have to take into account kind of the licensed sites, but I think that Punecha rightly called out there's a kind of gray area where people maybe outside the off-premise shop would consume. In some states, this is a very common feature of the business. In other states, it's more traditional within the definition, I guess, of the non-trade premise. So, yeah, it's difficult to match that one-to-one.
Sure. And I think your press release had a comment on you being encouraged about how some of the states have reversed some of the excessive hikes that get done. What are your thoughts on overall kind of state taxation and how it has evolved in the last few months as states have been kind of starved for revenue?
Yeah, I think particularly when the markets opened up, we saw some very quick and steep reactions in terms of excise duty. I think a bit of an encouraging news is that in Delhi and more recently in Odisha, this was rolled back to maybe what you call more normal levels or levels of increase. So as of today, I think West Bengal is still under quite a high duty increase of 30%. Andhra also quite very high duty, but I guess that's a little bit of a separate situation in the sense of the policy direction the state is pursuing. So there are some smaller states that are also seeing heavy duty increases, but some of the larger ones like maybe Karnataka, like Maharashtra, not really duty increases. So in that sense, it's a mixed picture.
So other than West Bengal, there is no kind of large state where the duty hike has been like really unreasonable.
No, where we spoke about last call was in Telangana. There's some 30 rupees per bottle on the main SKU, so that's also pretty sizable. Rajasthan some 10. So yeah, I think some states have seen annual increases more or less, so that would not be maybe too different. But specifically where it's related to COVID and maybe funding some deficits that the states suffered, particularly around COVID, some of that has been rolled back, and we continue to make representations as to what we see might be a more healthy level of duty for both the industry participants, but also the states themselves.
Right. And some of these states have kind of called this out as a COVID cess. So are you quite hopeful that in those states this will reverse once the pandemic is behind us?
I think we've seen two examples where it was reversed. I think at the end of the day, if the demand is so much impacted due to the COVID cess, there's also a very strong rationale for the state themselves to probably reconsider some of those increases. Whether they have labeled it COVID or a more general excise term, that I guess is something else. But yeah, at the end of the day, the state is also looking at excise revenues in total. So yeah, I think that is a shared interest that we obviously also very much looking at all.
Just one last point related to this. In your annual report, you've also talked about engaging with states on getting taxation more linked to the level of alcohol content. Anything that you would like to share there, where you think making some progress, or is still very early days on that?
So this will be a very much continuous effort. So, for example, in Haryana, we've seen a policy that actually distinguishes between alcohol content also of beer. So I think that is encouraging. But in our efforts, we continue to make these representations where we have some strong examples that I think make a lot of sense, and that is the message we convey. And whether that leads in the near term or mid or long term to follow up and implementation, I guess that we'll have to see later on. But we take very seriously our role to convey those messages and the way the excise model could be implemented.
Sure. Thanks. I'll come back in the queue.
Thank you. The next question is from the line of Krishnan Samamurthy from Motilal Oswal Securities. Please go ahead.
Yeah. Hi, Biren. You mentioned about 120 crore increase in net debt over March. Has there been any increase in working capital and specifically receivables over this period, and any delays from state government on this one?
No, the working capital is actually, I think, very healthy. So we focused a lot on the cash management, on the payables and the collections. So as such, I think the net debt increase was relatively modest if you would compare to the prior year Q1. Of course, there are a few states where trading is relatively low, so they might be a bit showing more of an overdue. But others, I think, as we've seen, very good collections. So net, I think on the working capital side, we're in a good shape.
Okay. The second is any comments on price increases that you obtained from any of the large states over the last 2 or 3 months?
Yeah. So as we've seen, I would say a healthy, positive price impact in the quarter. We've seen small price increases in, for example, Karnataka, Maharashtra. So all in all, I would say, where we continuously strive for healthy price increases in the sense of protecting the bottom line and some of the input costs. I think we're on a good track there.
Just on a follow-up on that, wherein the 2 states that you mentioned are pre-pricing markets, any states where you were expecting a price increase and you've not obtained it yet, and where you are hopeful of getting it maybe in subsequent quarters?
Difficult to comment on what must happen in the future. I mean, obviously, every state has its own considerations into proving that or not. So our role again is to strive for healthy, balanced price increases. Whether those will fall in what quarter or what year, we'll report back as when it happens.
And lastly, can you quantify the extent of the price increases obtained on an average?
No, I'm not putting that out. But for example, in Karnataka, it was 5 rupee per bottle, in Maharashtra 10. So yeah, I would say probably very much similar as to the kind of annual increases you have seen in the last couple of years.
Okay, thanks.
Thank you. The next question is from the line of Avi Mehta from IIFL Securities. Please go ahead.
Hi, sir. So consumer peers have indicated that July has moderated from June, given the local lockdowns. Have we seen a similar kind of impact in July as well? Would you be able to share that?
I think July has been, again, impacted state by state. So I called out Karnataka, where there was a week lockdown, which obviously is an important state in our total contribution. Some other states, some better trading due to reduction of taxes and what have you. I think if you would compare to maybe FMCG, where you might have seen a story of inventory building, which was subsequently, I guess, more depleted and back to more normalized levels. I don't think this is the case for the beer industry, where stocking up and etc. is less of a phenomenon than maybe in FMCG in some of the categories.
So it would be still an improving trajectory to that extent. I mean, on an aggregate basis, I understand the state level dynamics, but on an aggregate basis, because we don't have the exact proportion of each state, so which is why I was trying to kind of get on an aggregate basis, would it be an improving trajectory or a flattish trajectory or a declining? I mean, whichever way you want to take it.
No, I don't want to really specifically call out July, and I think we will come back on the totality of Q2. Obviously, when we talk about Q2 results. But what I said earlier, I think, the industry continues to be impacted a lot by the pandemic and the related restrictions. Encouraging was, of course, within Q1 we've seen a bit of a improvement month by month. So we'll have to see how that can continue going forward.
Okay. And the second bit is, could you share if you're seeing any change in terms of either market share, discounting on the ground, or any such sense because of the way the industry is going through, the pain that industry is going through?
I think our market share is more or less flattish in the quarter. I think we've seen the usual competitive pressure. I guess there was also quite some discounting on stocks that people wanted to list out of the market, so that maybe was a bit more pronounced than usual. But yeah, we continue to be very focused on the market share position, and whether demand is low or high, I think that will be an important parameter for us under any scenario.
Okay. And lastly, any update, how's the input cost situation kind of behaving, especially on the glass and the barley side?
Yeah, so that's looking on the barley side with most of the harvest now done, a bit softening of prices. So we have seen around 10% reduction on barley prices versus prior year. Obviously against a background that we entered the year with a bit more inventory than anticipated due to the drop in demand. On the glass, new bottle prices also moderated to kind of low inflation kind of levels. Mm-hmm. So from that sense, on the input cost side, much better picture than 1 year ago.
No, but on glass, the recycled glass prices, is there any change there because of the lockdown? Is that kind of hurting, or is that a risk that you kind of see? How is that behaving?
Yeah, in Q1 we have seen a similar rate of new versus recollected bottles as usual. How that will move going forward, I think that's difficult to forecast. There's a lot of local dynamics are at play. Obviously, the market is quite disrupted with on-trade continue to be closed. So we'll have to see how that impact moves going forward. So that recollection rate, I guess, is more of a question mark. But the pricing of the new glass, as earlier, is kind of low inflationary.
And barley, you said inventory is more, you had it with high inventory. Any expectations by when do you expect the new barley to kind of start reflecting? That's
difficult to call out because, again, that we'll have to see when the malting process is done and when we have consumed the inventories that we entered the season with. But obviously that's been taken into account into our buying strategy of the last few months. So we'll come back on that in probably Q2.
So, okay. So second half or nothing of that sort you could kind of share or no? No comments on that? I was trying to kind of understand from that point of view. The new barley reflecting in second, how would you see that? You don't want to share? Sorry, I didn't get it. So you are not able to share or you reserve your comments?
No, yeah, you're right. I'm not going to speak a specific month or quarters when that will be consumed, because obviously that is linked to the demand picture at this point in time in the coming months. I'm just saying that in our buying strategy, when we entered the barley buying more or less in April, we were well aware of the disruption due to the pandemic, so that has been factored into how much we bought in the last month.
Okay. Thank you very much. Thanks.
Okay.
Thank you. The next question is from the line of Ashit Anil Desai from Emkay Global. Please go ahead.
Yeah. Hi, Berend. Hi, Tumacha.
Hi. Hi, Ashit.
Yeah, I had a question. Is there any inventory or raw material write-off during the quarter? We had some situation in Bombay Breweries, which we had called off earlier.
No, we have not really had write-offs as such. I think it is fair to point out that the whole expiry and usable raw materials, etc., is a topic of attention given the sharp decline in demand. But as the quarter is more or less fully impacted by COVID, this is one of the topics that we're focused on. But I think the supply chain team is doing a great job in making sure everything is used in time, etc. So as of now, no definite write-offs beyond the provisions that we've taken in the March quarter end.
Okay. Okay. And on gross margins, if you called out state mix, but actually you've also called out positive state mix in the presentation. So what are the drivers for gross margin decline, and how much of those are one-off that you expect? Because from a 2-year perspective, if we see your gross margins are down almost 600 bits or 700 bits. Last year 300, 350, and this year also a similar decline.
Yeah, I would distinguish, let's say, the current impact and maybe last year impact. I think last year was driven by a large extent steep increases in barley and glass, which we're not able to price within that year on the revenue side, and the pressure on gross margin. I think in Q1 we've seen input costs as such pretty stable. So it's much more around the state mix and the brewery mix within that, coupled with the other element that I called out was more inefficiencies in the breweries due to the lower utilization of the network.
Okay. And given the lower input cost, do you think you'll be able to get back to last year's gross margins going ahead, or the brewery inefficiencies will continue?
I think the inefficiencies will be a function very much of the demand development going forward. So yeah, that's not something I can call out. What we see or what I shared on the input costs, I think that is looking pretty much better than a year ago. But as to how the demand recovery will move, I will not comment.
When coming to gross margin, unless we operate at our regular 80-85% capacity, gross margins cannot be compared. It's like comparing apples and oranges, because there is a lot of costs that we need to incur when we are operating only on single shift, vis-a-vis 3 shift, sometimes 2 shift. So this operating at low capacity has a big cost burden, which is spread over lower volume. So it's really not comparable.
Okay.
So unless we get back to original levels, you can't say that we are not getting good prices, or we are not saying we are not getting not able to procure material at the right price. So we are doing all that, but it's just that the fact that we are not able to operate at optimum capacity, which is hitting the margins.
Got it. And why is your depreciation lower this quarter?
That is reason what I was just saying. When we depreciate on a regular basis on a normal year, it is depreciation on 3 shift basis. 3 shift basis means your depreciation is double what your normal depreciation is. Now, if you're operating 1 shift, it is half. It is your rate. Then, if you're operating 2 shifts, it is in between these 2 rates. And in each unit, based on the maximum number of working days in which shift it has worked. For example, if unit A has worked 20 days on with 1 shift, the depreciation is made on 1 shift basis. If it has worked on 2 shifts for maximum number of days, the depreciation on 2 shifts. So that's why you are seeing the drop in depreciation.
Okay. We followed this historically also, or this is the only quarter?
Historically, most of our breweries operated always at 3 shifts.
Okay.
So we have never had this.
If I may take one more question, I just wanted your insights on if you look at other markets where bars and restaurants have opened up, and if you could call out what's the kind of recovery in the category that you've seen in those markets.
Yeah, if you look to maybe to pick one example, I think in China, for example, it's been even to some extent at pre-COVID levels quite quickly. But I would say a lot of it depends on the kind of restrictions that are in place, or consumer sentiment around going out and gathering in groups, etc. So I guess there are different recovery rates at different markets, and some have moved up, but maybe also subsequently moved down. So yeah, it's I guess it's difficult to put one figure to it, but there are very promising examples, and there are some examples where it is shown to take more time.
Okay. Thanks and all the best.
Sure.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi. Thanks for the opportunity. The first question is on any update on Andhra Pradesh to share, and have you seen any revival of orders from the government? Or at least the negotiations have improved?
If I understood you correctly, the question was about Andhra Pradesh?
Yes, on Andhra Pradesh.
Yeah. No, there I think we can safely say that continues to be very challenging, not least because of a taxation increase of some 75% on the consumer level. So I think the total beer industry, even since COVID opening up in May, has been severely down. So that continues to be a very difficult trading environment.
And last quarter you spoke about CCI report briefly. You said that will proceed this quarter. So any update on that, sister?
So on the CCI case, no, there's not as much an update. I mean, a lot of the process actually been on hold or suspended due to COVID. So a couple of these process steps have been pushed back, and hence we'll be submitting our responses to the initial report in the coming 2 months. So since that, not much of an update.
That's all from my side.
Thank you. The next question is from the line of Vishal Punmiya from Nirmal Bang Institutional Equities. Please go ahead.
Hi, thanks for the opportunity. So my first question is regarding the procurement of barley. So recently change in regulations, so you can now basically procure directly from the farmer. What benefits can you see from this in terms of procuring directly from the farmers instead of going through the APMC? And the second question is basically what would be the key focus area for the new CEO who has joined from a medium-term point of view? While he is not on the call, if you can just highlight his key focus areas, that would be very helpful. Thank you.
Yeah, just to clarify, your first question was it what are the benefits UBL gets by procuring directly from farmers by excluding the intermediary? Was that your question?
Yes. So what would be your change in strategy in terms of procurement, and what would be the benefits if there is a change in strategy?
Yeah, I mean, benefits would be cost. Basically, you will have a direct access to the farmer, and when you go through aggregators, some farmers will be selling at a lower price, but the aggregator will be giving you a higher price, right? So when you are accessing directly, you will get that bit of advantage. Of course, there will be fluctuations which has to be handled carefully, which we are doing. So there will be some cost advantage. We will not be able to quantify what is it as this, but there will be some cost advantage. With respect to your second question of our new MD, he I think would address the investors very soon. So you can hear it from him of how differently he would be handling this company, or what his thoughts are. So I won't be able to comment on that.
Just a follow-up on the first question. Any commissions that go away while procuring directly from the farmers, and also the logistics benefit that comes in direct procurement?
Yes, I mean, you will have a little more logistic cost. because you will have to source from different locations. That is there. But like you said, the intermediary fees, there are certain things which you will save on. So we are confident that it will have a positive cost advantage on an overall basis.
Will the duration of the logistics go down?
Sorry?
Will the duration go down in terms of traveling from one point to another, in terms of procuring the raw materials into the brewery?
That doesn't matter because between the March and June season, we procure close to 70 to 80% of the barley required for the full year. So if the barley is coming in even 2-3 weeks later and you've already contracted the size and quantity, the job is done. So it doesn't matter.
No. So beyond FY21, would there be any benefit?
This is a one-time benefit. You can't keep getting benefit on and on because then you'll compare vis-a-vis the lower base, right?
Okay. Yeah.
Yeah.
Thank you. Thank you very much.
One-time benefit.
Thank you.
Okay.
We would request the participants to please limit your questions to 2 per participant. The next question is from the line of Himanshu Shah from Dolat Capital. Please go ahead.
Thank you, sir. Thanks for the opportunity. Most of my questions have been answered. Just one question. How would we try and bring back the consumers as the economy starts recovering? Like, what would be the input factors or key things that we would try to get back the consumers post the pandemic?
Yeah, I think we've seen practices globally that have worked pretty well. I think on the one hand, it's not only waiting for consumers to come back, but even on current circumstances, driving more of in-home consumption. So what we're doing digitally is very much focused on that. As soon as bars and on-trade is allowed to open that, we'll definitely come with a range of activities to support that. But we'll have to also see how that deregulation actually will happen so that we cater our efforts accordingly.
Okay, sir. So just any kind of price cuts or anything that we would envisage or like to take for to attract the consumer?
Can you repeat the question?
Any kind of price cuts or anything in any specific states or any location that we would be envisaging to bring back the consumers?
No, I don't think price cuts is a kind of sustainable approach to, you can always have your activations and similar types of programs, but, as it is, I think it's more about a long-term sustainable approach that consumers feel confident, feel engaged, that, coming back socially is safe to do. And I think, many examples around the world show that, people like to gather. I think that has not fundamentally changed due to the pandemic, but how and at what point in time that is feasible, of course, that differs a lot by market. But in essence, people, of course, want to continue to gather with friends and family, and I think that has not fundamentally changed.
Okay, sir. Just 2 more quick follow-ups. One on CCA case, we will be filing the replies within next 2 months. You just called out that. Is that right?
Yes, that's correct.
Okay. And so secondly, with respect to Andhra Pradesh state, while you call out the trading environment remains difficult, just want to confirm, is the state government ordering with us or the ordering remains prima facie to private parties only?
So any orders we get is from the state corporation. What else they order, I don't have visibility on it. If that was your question.
So I'm just asking, I think to post the route to market changes in Andhra Pradesh, a larger portion of ordering was happening with private parties. The same scenario continues as on date for whatever volume that must be happening in these states.
Yeah, I commented earlier that I think the total industry is severely down. So I think reading in the volumes that are trading there today a lot about market shares, I think that is a bit difficult. So I would just say the market is very severely down, and we'll get exactly what orders. I don't have visibility on. I can only see what we have received in orders, which is since the lockdown, next to zero. So that is the situation for us in the state of Andhra.
Thank you. The next question is from the line of Jatin Chawla from First Voyager. Please go ahead.
Yeah, hi. Just a quick follow-up on the gross margin thing. Does the fact that there is no on-trade volumes at all, does that impact gross margins also?
Maybe only a little bit, to the extent that the premium part of the portfolio is a bit more skewed to the on-trade. So that will have some bearing. But again, the lower utilization of the network and the state mix has more of a pronounced impact in Q1.
Sure. Okay, thanks.
Thank you. The next question is from the line of Abneesh Roy from Edelweiss. Please go ahead. Abneesh, your line is in talk mode. You can go ahead, please. We would request the current participant to please unmute yourself.
Yes. Yeah. So, sir, you mentioned in 2 states the duty has been reversed. So, given the current scenario, is there some benefit you're seeing in these 2 states?
Yes. So in June in Delhi, early the month of June, Delhi reversed. So I think we've seen progressive improvement in the market since. For Orissa, that occurred early July, so it's a bit too early to read a lot into it. But of course, in general, more affordable pricing will be a big plus to have consumers come back to the category.
And one follow-up, sir, in Andhra, you are also suffering, all liquor players are suffering. So now, are you planning some remedial action on the legal front? Because in some of the other states we have seen this. And on duty reversal there, is there any visibility, or all these are steps on the prohibition which is there? So step-wise prohibition which they want to do.
No, when you mean legal action, what's the understanding? I didn't get your understanding itself.
So in some of the other states we have seen when route to market there is a drastic change and it starts favoring some of the smaller players, regional players, and it is essentially unfair, not level playing field. We have seen in 2-3 states earlier there has been some legal action, and some states we have actually won. The industry has in fact won. So here, is there anything similar possible? Anything similar happening?
You are right if you are just saying that the size of the industry is remaining as it was prior to these new actions by the state government of Andhra Pradesh. And if the ordering was not being given to us, it made sense to try and address the issue. But here the industry itself is come to a minuscule level, and the state government is, of course, not officially making noises that it is going towards prohibition by the time the current incumbent government comes for re-election. So when all these things are there, does it make sense to take it legally?
No, my question is the market share shifting to the unorganized players, fly-by-night operators? Is that happening?
You are right. If the market share is of a large volume, the volume itself is dwindled. The volume of Andhra is dwindled.
For even the illegal players?
Yeah, it's not illegal. They're not illegal. Please, don't get that straight. They're not illegal. They are local players who are not national. These are not illegal players. These are getting orders. Strangers getting orders. They're not illegal. They've got a legal license.
No, local players. My meaning was local players only.
Yeah. So the local players who are getting orders, but the entire industry has come to probably 1/10 of what it was.
Okay.
So in such a scenario, does it make sense to take action? Doesn't.
Yeah. Got it. Sure. Thank you.
Thank you. The next question is from the line of Krishnan Sambamurthy from Motilal Oswal Securities. Please go ahead.
Yeah, thanks for this follow-up. My question is regarding the logistics of home delivery. Now, wherever home delivery is allowed, either through the wine shop delivery guy or through the aggregator, how do you get back the old bottles? Does this get collected on subsequent orders, or do you say that this is a new avenue of growth, so eventually it will come back to the company at some time, and therefore is there an implications on lower margins because of higher proportion of new bottles, possibly until any time until the on-trade segment is open?
Whether the consumption is home trade or whether it is home consumption or whether it is on-trade consumption, the used bottles comes back to us on a different route itself. There's no deposit model where it comes back in the route of supply. So, for example, we build the corporation in a state like Karnataka. The corporation will build the various retail, or they will build the various on-trade locations. And all these points of consumption, they don't return it back to either the corporation or back to UBL. They are being picked up by bottle aggregators. So it is a total different sector itself which operates. So whether the consumption is at home or whether the consumption is on-trade doesn't make a big difference. It finds its way back.
Yeah. So that even there, right, if you look at in the current environment, wouldn't there be a delay in pickup by the bottle aggregators and eventually to you?
They can be for example, say you consume a case of beer in your home. Will you keep that bottles long in your home? You don't know, because it consumes space. So what you will do at the end of the week, you will find somebody to pick it up. I mean, you don't even want anything for it. You just want it to be cleared. So these are the people who pick up these things, and it comes back to the bottle aggregators.
Understood. Thanks.
Thank you. As there are no further questions, I would now like to hand the conference over to the management.
Thank you, everybody, for joining the call today. Thank you for your interest and your questions. Please stay safe and look forward to catch up for the next quarter's call. Thank you very much.